Realty Resource Radio on K107.1. I'm Greg. I'm here with Lori, and we have a special guest with us as well. He is the Central Ohio VA loan expert who grew up in small-town America. He's from Ottawa, Ohio. He's been in Central Ohio the past 15 years. He is an All-American basketball player from the University of Findlay. He holds 2 master's degrees, one in technology and one in administration. He is a certified VA lender working for a company owned and run by veterans. So you know they care about vets. Welcome, Ryan Maag.
Wow, what a wonderful welcome. It's an honor to be here today.
Thanks. I talked about this a little bit last week, wanting to know what makes a VA loan so great. Because you had talked to me about some people that maybe didn't have a VA loan, and I was like surprised. Can you tell folks what makes a VA loan so great?
Well, there's a lot of dimensions, I guess, that make it a phenomenal program. You know, the veterans are here that, you know, fight for our country and serve for us, and they, as a veteran, you have earned the right to you know, get these phenomenal programs. Mm-hmm. So as a veteran, you know, a lot of people need to understand that a VA is not purchased by the veteran, the government. What it is, it's a little bit of it's entitlement, a certain percentage of the loan. So actually, you know, our bank would be the one that would be providing the, you know, the services. So some of the things that are important with a VA loan is the 0% down. So of course, if you don't have a lot of assets, you can, you know, of course, come to the table and with no money or very little, you have a much better rates. You know, you can go, like I said, alluded to before, 100% loan to value, and then also no PMI, which is very important. So like if you did a FHA, you got to bring 3.5% down, and you also have PMI, which is pretty substantial, where, like I said, rightfully so, the veterans deserve this phenomenal program.
No money down.
No money down.
And 100% loan to value. That's just like, I like the house, I want it.
Yeah. Then you're pretty much guaranteed. Yes.
Ryan, can you get me the loan for this house?
Yes, there is a funding fee.
Is there still a funding fee? And
there's
who pays
a funding
that?
fee. The borrower pays the funding fee, but you can tack that on to your loan. So essentially, you get 100% financing.
There used to be sellers,
right?
And
then 3.5% the funding fee goes on to it. So essentially, your loan could be a first-time user is 2.15%, and then a second user or second time you've used the loan, it's 3.3%. So actually, you're doing 103.3% of the loan amount.
Okay, so you still don't have to have the money in your pocket.
No, you can finance it.
You actually borrow that money into the loan kind of thing.
Yes.
Unless, in the course over 30 years, that's like next to nothing.
Yes, very, very true. But then you also, if you put 5% down, it cuts down the funding fee. So if you put 5% down, now you have investment or skin in the game, so to speak, that you, you know, the first time users, if you put 5% down, it's going to be 1.5%. And then if you put 10% down, it's actually 1.25%.
It's a funding fee.
It's a funding fee. So essentially, yeah.
Are there mandatory seller costs? Like there in the past, I know there used to be with VA loans.
The seller costs, the only thing that they have to do, they have to pay for the termite inspection.
Okay.
100%.
That's good to know.
Which is, you know, anywhere is 100, 150 bucks. But, you know, some of the other things that are important with a VA loan is that it has to be a VA certified appraiser. And the VA, you know, the appraiser has 10 days to initiate or to conduct the appraisal, and they have 5 days to return the appraisal. So essentially, it's, you know, 15 days.
Are these appraisers like are they like kind of like home inspectors too? Like if they're out there appraising the house, and I know if you don't have, like, you know, you've got steps and you don't have a handrail, is the appraiser for the VA going to point something like that out?
Absolutely. And then on the bottom or on page 2 of the appraisal, it'll say subject to or as is. So if it says as is, and that means the value is, you know, as is what the property is stating currently. But if it is subject to, then of course there's going to be issues or items that need to be repaired. So
something could come up after the home inspection, and I know Greg's asking that because we literally had 2 deals recently that had this issue, and I was surprised. I was like, well, when did the appraiser become a home inspector? We've already been through the home inspection, but they did require.
Well, what they're doing though is they're protecting the veteran. You know what I mean? So
that's good.
It's a good program, phenomenal program.
Are there veterans who don't qualify? Can you be a veteran and not qualify for a VA loan?
Well, you can. I mean, you might not qualify, like if you don't have a qualifying score, and then also you can't have any disputes or any collections on your credit report. So that's some of them. Another thing would be a dishonorable discharge. One of the most important pieces is you have to use your DD-214, because I had an individual that it was actually in Dallas, Texas, that had a dishonorable discharge and still was able to get the VA funding. But the thing that trumps everything is your COE, which stands for your Certificate of Eligibility.
And how do I was going to ask you how you get that. Like, is that? I mean, if you don't have it,
if you don't have it, you supply me or our bank with your DD 214, which you have to have 90 days of active service.
Okay.
So if you're in the National Reserve, or the National Reserves or Guards, what you have to do is, if you like, here's an example. I had an individual that had 83 days of service in the war. He came back. He didn't qualify because he didn't serve 90 days. So what he needed to do was get a point statement, collect all that information. Then we go to the VA portal, which is out of Atlanta, Georgia, and then they issue the COE, the Certificate of Eligibility, which we do that for you.
Now that is like a National Guard person, right, that you were talking about?
Yes, National Guard
who
reserves.
actually went and does his service to the National Guard, but he year after year, but he just did not hit 90 days.
90 days,
because,
yes.
Because they aren't necessarily full-time.
Well, because he wasn't
out in the field.
deployed.
Wasn't deployed, okay.
well, and I've had clients a long time ago that would drive to Cleveland
Yeah,
to
you
get
go
their
to Cleveland.
certificate of eligibility
You can,
when they
but
were in kind of a hurry for it.
But it's a lot easier for us that we can do that because we upload your, like I said, if you don't have 90 days, like if you're not in the Marines, the Navy, or the Army, and that you've served more than 90 days, then what you have to do is get the point statements and collect everything, and then we upload it to the VA portal, and we can get it back in an hour, as well as, then again, it could take 7 to 10 business days.
Should people, should they expect to be able to close in 30 days when you're doing VA, or would you recommend asking for 45 to 60 days?
They can close in 30 days, but like I said, the borrower has to be responsive and also make sure that you have your COE. That is very, very important because that COE, Certificate of Eligibility, can
your ticket,
slow
basically,
it up.
right?
Yes, because that tells us everything. It tells us, are you exempt from the funding fee, which of course we can build on that, and also are you entitled? Because some people, if you do the COE, they may already have a VA loan, and then of course they're not going to qualify for a VA loan on a new purchase. So maybe they have a rental property that they lived in as a primary residence, and then now they want to use that as rental, and then they want to, of course, buy a new primary residence.
Well, could they pay off the VA loan and then become eligible a second time?
They could. They could do that, or they
That's
could
a good
refi.
question.
They could refi into a conventional or an FHA or another program, and then that eliminates off of their COE. It shows that they actually have had a VA loan on that specific property.
But they're allowed to have.
But then now that entitlement comes back.
Oh, that's pretty sweet. So they could. Is there any limit to that? Like, can they do that every couple of years, or?
Yeah, you can do it. As many times as you want. But like I said, it's all based on that COE, which of course is up to the VA's office.
Well, I think that has the potential for some investment opportunity for the veterans as well, and I'm going to explore that with you on another show.
Sounds great.
And we have on our website, I know we have the military thank you program.
We do.
And I also offer people at the Defense Supply Center, local here in Columbus, Ohio, we offer them some deals because, we want to thank our military. And Ryan's our lender of choice on that.
It's stressful. It's hard work. They deserve a break, and we're giving them a cash break.
Well, like you said, with them fighting for our country and keeping us safe here in our homelands, I think they deserve this. I know there's some people out there that say, yeah, I wish I were a veteran. Well, you know what? It's not that easy. It takes a special individual, and that's why they have these special programs.
Absolutely.
The company you're at, what's the name of that?
The Federal Savings Bank.
The Federal Savings Bank? Now they're veteran-owned and
Veteran
managed?
owned and managed bank. Actually, we're the only one in the country. So what happens is our the chairmen of the bank, they actually served in the military, and then also our EVPs, executive vice presidents that we report to. They've they served in the military as well. So that's why our VA programs are very phenomenal.
Well, you were telling me about them going out of their way to help a veteran.
Yes, they do.
Tell us a little bit about that.
We market the veteran. That's kind of our niche, of course. So, we go, and one of the things that we do is we have 45-55 DTI, which stands for debt to income. So on the front side, you can have 45% that is just specifically for your mortgage, and on the back end is 55% DTI. So, we give them a little bit more buying power because, like I said, 55% of your gross monthly income is pretty substantial, where no other program would do that or lender.
That's amazing.
We're going to have some materials out on our website that you can get if you're a veteran. 4 important things that veterans need to know. Come to realtyresourceradio.com and get that download.
And how should people reach you? Ryan, what's the best way?
They can reach me email, rmag at thefederalsavingsbank.com, or a direct line is 614-407-0308.
What was that number again? 614?
614-407-0308.
Awesome. Up next, we have Robert Corwin, Vice President with Elite Land Title, and he'll be talking to us about title issues.